Not investing is costing you not only money, but the very life that you want to be living. So let's fix that by understanding what investing is in the first place. What is investing? We've got to really understand that investing is not gambling, it's not trading, it's not speculating. Investing is when you take some of the money you have, your hard-earned money, and you put it to work for you. You put it to work by getting an asset. By investing in an asset, you buy and control a great quality asset. That's really important. That can then work for you. It grows in value, it generates income that then grows, that can give you peace of mind. It lets you know that you will be able to stop working and live the lifestyle you want. It will let you know that no matter what happens in life, you've got this thing to lean on and rest on. And never having investments is the biggest and most riskiest thing you can have. So knowing what it is really important. Now, there are different kinds of assets, and we're going to go into that deeper into this video. But simply put, it's when you control a wealth generating asset that can do two things: grow in value and earn income. So this is really the important next point, is understanding what an asset is. An asset is not the house you live in. An asset is not your shoe collection. An asset is not the thing with bank lists like your jewelry or your art collection, your wine. No, something is only an asset if it can grow in value. Yes, and it does grow in value in a way that is proven and you can bank on that, and it can generate income either in the form of like stocks and shares. This is where you own a share in another business. And we'll get to how to do that successfully and safely. And you generate from and benefit from the growth and the value of that business. That's called capital growth. And you earn money from the profits that get paid out. So in terms of stocks and shares, these are called dividends. So capital growth plus income is what's called your total return on an investment. Really important to understand, and this is what an asset is. So it must grow in value and generate income. If it doesn't do those things and you can't feed off it, it ain't an asset. Think of real estate. Again, can grow in value, property. And so the value of that property grows, but also you can generate income from the rent that it earns. Now, there are certain assets where the capital growth is small, but there's capital preservation, but they earn a higher income. And these are called fixed income assets. So these are things like loan instruments, structured notes, and a whole nother class of assets there. So this is really important, is to know what an asset is. So now you know why you need to be investing and what an asset is. You need to really understand the benefits of investing. First and foremost, investing makes sure that you keep the buying power of your money. So when you take some of your money, you buy an asset that can grow in value and generate income, it grows at a rate greater than inflation. And this is what's so dangerous in saving. If you just have money sitting in a bank account or under your bed, it literally is getting poorer each and every day. So investing first and foremost is keeping up with and beating inflation, which is absolutely vital. But it's beyond that. Because assets can grow in value and they generate income, they literally create your future wealth, which you can then feed off. So with saving, it's like having a tin of peaches in your pantry. Once you've finished eating it, it's gone. Investing is planting that peach tree. It grows and you get to feed and eat those peaches year after year after year. So there's sustainability of your long-term financial well-being. And this is why you need to be investing, because assets create your freedom. No assets, no freedom. No assets, you can never stop working. And that is the biggest benefit of all, is having that peace of mind that no, you can do that. So what are the type of investments that you can have working for you? Well, there are 8 primary asset classes. Yes, many people don't realize this. Most financial advisors will just put people into 2 asset classes, which is why most people stay poor, despite thinking they're doing the right thing. So what are they? The first and the most powerful asset class that you must be invested in is called equities, stocks and shares. This is where you own shares in other businesses. It's a super easy asset class to invest in with small amounts of money, and it is absolutely foundational to your wealth. And we've got a free training for you which goes deep into how to get that built up as your as your core base of your investing. So that's equities. The second big asset class is real estate, investment property. This is not your home. This is other property which other people can use and get benefit from, and it grows in value and you get their rental yield from it. So that is the second big asset class. The third biggie is what's called fixed income. This is where you've got your capital, your money, and there's capital preservation, and you generate an interest from that. Just slightly different from your equity and your property, where you've got capital growth and the income generation for your total return. Fixed income are investments like structured notes, loan instruments. Yes, you become the banker and lend money to other people. Bonds is an example of this. Fixed deposits in a bank is literally you lending money to the bank and getting a very poor return back from it, but that falls under this asset class. And really, this asset class is more applicable for when you're ready to start eating off and feeding off your assets, because you get the capital preservation. The fourth asset class is now getting into more specialist elements that you can add in. And this is commodities. These are things that us humans use to live in our lifestyle. It can be industrial commodities like steel and metals. Gold and silver also fall under here, which are great wealth preservers. So that is your fourth asset class to consider adding in. The fifth is crypto. Yes, crypto is a very specialist niche and emerging asset class. And in our investment pyramid video, I explain how you should structure these assets together. So it's very important to not think cryptos are going to be the thing that are going to save you. No, they have a role, but only after you put the rest in. So cryptos, its own asset class. You then have another C, which is called collectibles. And this is things like art, like wine collection, comic books, vintage cars, which can have a role. They grow in value, but they don't generate income. So you see, assets can do one or the other. And then we have cash. And cash is a form of an asset. Whilst it's not going to grow well, like your other asset classes, it brings you liquidity and it has a role in your wealth planning. And finally, precious metals as its own separate element. Now, I mentioned that under commodities, but you want to consider having some gold and potentially Bitcoin as a chaos hedge. So there you have it. Those are the 8 kinds of assets that build up your portfolio, and you want to have a spread of investments in that. We go deeper into portfolio design in that free investing training. So now you understand the different types of assets, but what about risk? And isn't investing risky? What is investment risk? This is such a misunderstood element. People say to me, and isn't investing risky? So let's understand what we're referring to when we talk about investment risk. It is called volatility. Now, certain asset classes, like your equity, like your real estate, like your crypto and your commodities, where there is a capital value, where your value of your asset can grow, its value will go up and down. That's just what cold volatility is. And investment risk is just the range of how volatile, or what the range of movement in the capital value is of that asset. So this is super important, because if we don't understand what a word is that's being used in the media, and all the alarm is like, oh my God, the stock market's crashing, or there's a risky investment, we can end up not doing what we need to be doing for our wealth, because we just don't understand. And this is actually, at the end of the day, knowledge is the most powerful investment we have. So risk just means volatility. So all of your asset classes that where you have capital movement, like equities, properties, cryptos, commodities, collectibles, in fact, most of your investments, their value will move up and down. Now, research has shown that after a 3-year period, when you started investing, the range of movement from when you start will have dampened down just because of time. So all of these assets tend to do this, and the stock market does this, but the trend is always upwards. Over time, the trend will be upwards. So we go, it's just a matter of scale. So when we're investing, we are talking about buying assets and holding them. We're not looking at selling them. We ride that ride, and any money you're going to be needing in the next 3 years, you don't have in capital volatile assets where there's any capital movement. So under 3 years, you hold your investments, money you're going to need in that, in your fixed income kind of assets. Beyond 3 years, you have where there's capital value variations. And that is as simple as the risk management and understanding what it's about. So, how do you start? Well, there are 4 P's to successful investing. First, you need your purpose. Why are you investing? How much do you need? The goal. Remember, your assets are there to pay for your lifestyle. That's what you're building them up to create your financial freedom. And you've got to know what that is. And there's another video that goes deep into working out how to create your freedom number. So once you know what you're headed, how much you need, you then need to go and understand what products to invest in. You need a quality product. And you start with index tracking. Yes, you start building up your equity investing using these powerful investment funds called index tracker funds. That's your product. Third is you need an online broker platform. You don't need a financial advisor. You don't need anybody else making money off you. This is a lot simpler than most people have led to believe. And I teach you how to do that in that free training. So you open your online broker platform, which is the way that you'll buy those assets and hold them. Yes, you can do it all from your phone with lower amounts of money. And finally, you need to follow a proven process consistently. And the KISS, keep it simple, safe, and sexy, is exactly the process that I used to create my financial freedom all those years ago, that I still use to manage and grow my wealth, and that thousands of people have used to create their peace of mind, their freedom, and get on and know that finally they know that their money is working hard for them, not somebody else. So get that training, dive on in, and really get your investments working for you, knowing that you can sleep well at night, you've got this part of your life sorted.